Good morning, all. It's Alex here at Cestrian Capital Research. It's currently Friday, the 1st of September. Welcome to the first Inner Circle morning show we've had for a little while. It's currently around 10 past 7 Eastern time as we're recording, and this should be posted by about 8:30 Eastern time today. Okay, so a pretty short show today. So we want to run through a normal disclaimer in a second, and then want to step through the four major equity indices, being the S&P, the Nasdaq, the Dow, and the Russell. And then we'll look briefly at Bitcoin and Ether as well. Before we do any of that, let's just do our disclaimer, which is on your screen right now. Disclaimer: this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in the webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in the webinar is intended to be investment advice, nor should it be relied upon to make investment decisions. Cestrian Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stock, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Cestrian Capital Research. Cestrian Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, so let's start by taking a look at the S&P in the larger degree. So just wait for this screen to change here. Okay, so here we have the S&P in the large degree. We use the SPY ETF as usual. So let's take a look where we are. So the thesis, as you know, that we have is that this spike low here in October was a wave 4 low from a 5-wave up cycle that started back in 2016, and that we're currently traversing a wave 5 up. And if that's true, we can expect the SPY to hit somewhere in the range of 550, 560 before rolling over. So we've got, you know, a fair way to go before then, a good probably 20% up to go before then, until the risk of rollover becomes really high. Let's look at the smaller degree, because there's nothing on this chart yet that would, I think, certainly dissuade me from that notion. Could happen tomorrow, could happen today, but right now that chart looks righteous, as in it looks like we're on track for that wave 5 high. And again, wave 5s typically peak somewhere between the 61.8 and the 78.6 extension of the wave 1 to 3 length combined, placed at the wave 4 low. Let's see what the shorter term chart tells us. So as you know, we use the ES futures to look at the shorter term. And the reason we do that is futures have longer trading hours, it's more granular trading data therefore, and we can learn more about short term prices from that. So let's switch on to the daily here. Okay, so let's see where we stand. So this is where we've been tracking the move up from the October lows. And let's just zoom in a little bit and see where we've been and where we may be heading. So from October down there, we get a really nice 1 up, 2 down, 3 up, 4 down, 5 up. That's the December peak right there. Into January, we get a sell-off for a large degree wave 2 down into the December lows. I'm sorry, that high there is mid-December. We get the end of December lows here. We set off then in this larger degree wave 3 that we're still in on this time frame. So this is a weeks and months time frame here. So we get a wave 1 up into early February, a 2 down into early March, a 3 up into July. And if you remember, that felt relentless, and that's because it was a wave 3 of 3. So they do feel relentless. A wave 4 down. It looks like Friday the 18th spike low was the low for this wave 4. That was retested somewhat Friday the 25th as well. Not quite as low a low, but it was retested and a higher low was struck again, suggesting a bottoming. And if this chart is, if we're on the money here, then remember what we just said about wave 5s, and we're in this wave 5 here within this overall wave 3 here. Well, wave 5s peak somewhere between, again, the 61.8 and 78.6 extensions of the prior wave 1 and 3. So if we were to be balanced in our forecasts, we would say, let's call that wave 5 peaking at around 49.50 on the future, something like that. And by complete coincidence, that would coincide with a 2.618 wave 3 extension in this slightly large degree. So that would be the 2.618 extension of this wave 1 up back here that peaked on the 15th of December. So for now, we're looking up. So as you know, in the hedged index trading, my own personal position, as you know, is heavily net long in these things now. I still hold a little bit of SPXU on the short side. I'll continue to hold that. So if nothing else happens, if we get direct ascent, I would expect to sell both UPRO and SPXU at the top here just to clear out. If we get a move to the downside in any more concerted way, I may add to SPXU and try and sell it for a profit if the S&P falls, but we'll see. Let's move to the NASDAQ. So let's look at the QQQ ETF. Now, we'll do a separate session on this topic at some point, but this is a slightly different take on how we've been presenting the NASDAQ. So far, and I want you to know that this is not our base case expectation. This is an upside case. So if you look at all those market unopened notes you've been seeing in recent days and weeks, they all have pretty much the same QQQ chart. It starts at the 2018 lows, moves up to the pre-COVID highs. That's a wave 1 up, a 2 down into the COVID crisis, a wave 3 up. So where this is labeled 1 here, we've been labeling that wave 3 up into the 2021 highs. We've labeled this as a 4 down, and we say we're now in a 5 up that will peak somewhere between 410 and 460 probably. This here is an alternative, more bullish case, and I'm not suggesting that this is our base case expectation, but there's a lot about tech and the NASDAQ at the moment that suggests that this might be happening. And the backdrop here is a stronger than expected US economy, rates that I expect will start to fall before too long, a capex refresh cycle in technology, which has an AI narrative, but in truth is just it's time to change out some hardware and software because it's old. And if all that comes together, we might be in a wave 3 in the NASDAQ right now. And how that might play out is that the COVID low was the low, a wave 1 high here at the end of 2021, a 61.8 retrace wave 2 low, that's a righteous wave 2, and then a wave 3 up that might peak at 650 on the QQQs, maybe even higher, but let's call it 650 for the 1.618 extension, before a wave 4 down that probably wouldn't go lower than, let's say, 410. And then a final wave 5 higher. Now, I think if you started talking about that on Twitter right now, you'd be blown out of the water for being an idiot, and that may prove to be the case. But this is definitely a possibility. And so in our work here, I've mentioned a number of times, key thing that we're doing is focusing very, very clearly on this zone here in the NASDAQ. Okay, right here between, let's call it 400 and let's call it 450. Okay, this zone is where we'll find out if this here is a wave 3 of a wave cycle that started at the COVID lows, or whether it's a wave 5 of a cycle that started at the 2018 lows. This here will be the proving ground. If the NASDAQ, if the QQQ pushes up strongly through this, we're in a wave 3. And if we are, then it's not going to stop before 500 most likely. There's every chance it goes to 650, and it could, on the QQQ, go higher. So the thing we're really keen to avoid in our work is to not make a mistake here. The conservative thing, of course, to do is to start taking NASDAQ profits in this range up here. That's not very far away now. And to clear down into cash or even to go short the NASDAQ, that would be a colossal error if this is a wave 3, because we'd be in the heart of a wave 3. And if we were to do that, we would just surrender a ton of money that could be got for doing nothing. So lots of our effort is focused on this, and the effort is going into fundamental analysis, looking at the growing order books in the software companies and the hardware companies that we follow, looking at the macro backdrop, GDP rates, growth rates, Federal Reserve rates, all of those backdrop factors that will determine how high these tech stocks can rise. But this is the key focus right now. So of course the market might go to zero tomorrow. It's always possible. That's fairly easy to deal with, which is to say, well, hedge, go short, all those things. But the risk, I think, as in the unexpected thing that could go wrong, is missing out on real upside that could be ahead. And so that's the thing that's occupying us right now. Again, base case, we're in a fifth wave up move in the Nasdaq, and the QQQ will peak somewhere between 400 and 450. That's the base case. But it is a real possibility that this wave 3 is in fact in flight, and we could be heading up to 650 on the QQQ. Okay, enough with such nonsense. Let's look at the short-term NQ chart. Now, again, this is the move up from, it's on the daily, from the 6th of January low, wave 1 up, a really shallow wave 2 here into March lows, a 200% extension wave 3 up, almost to the dollar, shallow 0.38, 0.382 wave 4 down here, and we're probably in a wave 5 up on this time frame where the futures hit probably 18,000, I would say, as a peak. And in the hedged trading plan in the inner circle service, you've seen us cut shorts as this headed into the lows here, roll some of that into longs, and we're expected to hold TQQQ until at least this level. And to state the obvious, getting that wave 5 or wave 3 call correctly in the Nasdaq large degree will make the difference between doing really very well with this TQQQ, which if it's a wave 5 and we call it properly, that will be a real huge result for TQQQ, or doing really exceptionally well if it's a wave 3 and we hold until the peak of the wave 3. And so it's a great personal interest as well as professional interest to try and get this right. Let's go back to the large degree and let's look at the Dow. This is the DIA ETF. Not a great deal to say here. This looks like we are tracking for a wave 5 up. Trying to compare the different indices. If Nasdaq's in a wave 3, it's probable that the S&P is also in a wave 3. That's not an uncontroversial. It's not a controversial thing to say. There's lots of overlap between the two. Nasdaq typically has shorter time frames and larger wave amplitudes, but there's plenty of similar behavior between the two indices. It's quite possible that the Dow could be in a wave 5 and the Nasdaq in a wave 3. So if our call is too conservative on the Nasdaq right now, we end up having to adopt the more bullish case. We'll probably go the same route with the S&P, but it's quite possible that the Dow rolls over and the Nasdaq does not. So we will see. Shorter term, and the reason it will do that obviously is a rotation of money out of value and into growth, which if growth is on fire, we could well see happen. Here's the YM futures, which are tracking out really a nice shorter term wave 5 up now. 10th of July there, low. We called that actually successfully the start of wave 1 at the time, I'm pleased to say. Peaked on 27th of July, deep wave 2 correction that looked like it had bottomed on the 18th of August and put in 4 retests of that, but finally broke it for a 25th of the August low. And then we look like we're in this wave 3 up now, which the Dow's not explosive moves in the same way that the Nasdaq is. So a wave 3 might peak around the 1.236 extension. It may not go higher than that, but nonetheless, that'll be a good result for the UDAO holdings that we've talked you through and disclosed to you. Those SDAOs will be dropping in value, but overall that net long position should be climbing. If this is wrong and the Dow turns down, we may get add to that SDAO and look to sell that at a gain. We'll see. Onto the Russell 2000. This is the IWM ETF. The next move, I think, is another assault on the top of this accumulation zone. So we've got this falling lower highs red line of resistance here. So I would expect the IWM to run up to the mid 190s, and it's either going to hit resistance there again and turn down again, or it will power through. What I'm trying to do personally here is to be positioned very long the Russell for the moment when it does power through, because I think it will. And if it does and it moves into this markup zone, I think it's going to move up really quickly, just like it did in 2020, because there's very little in the way of unsold inventory up here at these prices. Very little way of bag holding up here. And I think we'll then see a stampede into small caps if it's all determined everywhere, and it will be all over the financial media if so, that small caps are the new hot thing. So the upside potential here is really dramatic if we can get it right. If we hit resistance yet again at this level, and we turn down, then we'll just be adding to TZA and disclosing that in the inner circle service and trying to ride the downside for profit once more. It's been a really nice trade, that long TNA, long TZA pair. It's been successful on both sides for us, and those of you who have followed those ideas hopefully have profited nicely from that. Let's just do the Russell Futures, RTY. Here we go. So very simple trading plan, TNA, TZA. TZA sold down to very low levels now, pocketing nice gains on the way down here. Holding TNA very long now, and let's see if it can run up to that wave 5 high. Great, we should be able to bank some nice profits. If not, and it rolls over, then we'll add to TZA, try and profit on the short side, and wait and go up again. Background here is house view is we are in a bull market, and any short positions are temporary in nature, and not their welcome is to not be overstayed. Let's finish off by looking at crypto. Now, crypto is pretty interesting at the moment, I think, more interesting than it's been for a long time, which is the SEC is basically on the back foot about these Bitcoin spot ETFs. So the court struck down its arguments against Grayscale, for instance, and basically said the SEC are being capricious. And you can agree or disagree with that, doesn't matter, but it looks to me like these spot Bitcoin ETFs will get approved. So that's going to be BlackRock, probably Grayscale, maybe Fidelity, maybe others. And that, I think, will make it much easier to own Bitcoin, and therefore there's going to be more demand for Bitcoin. So I think that means only one thing for Bitcoin price, which is up. Probably we'll see some appeal or other rearguard action by the SEC on this topic. So I personally think the value of Bitcoin and Ether, for that matter, is entirely driven by the push me pull you that's going to go along with this court case around the SEC and spot ETFs. So personally looking up in Bitcoin, it's incredibly volatile. It can go down a lot before it goes up a lot. We'll see. But to me, the thing I'm looking at is not hash rates, not miner behavior, not Binance, not Coinbase, none of this. Just looking at what's the legal situation around spot ETFs. Because if the industry creates spot ETFs and they're held in particular by grown-ups like BlackRock and Fidelity, as opposed to plumbing v1.0 like Grayscale, I would imagine the popularity is going to really soar and take the price with it. Ether, same chart really. Ether is more volatile if possible than Bitcoin, but same chart. If spot Bitcoin ETFs are formed, I would expect spot Ether ETFs to not be too far behind, because we're not talking Dogecoin here. We're talking the second biggest coin out there. So if Bitcoin is possible, then I think so too will be Ether. I think it will follow that. So again, anything can happen. It can certainly drop more than this. As you can see, since the October lows, it's only put in a 0.5 retrace. That's not much. It could easily put in a 78.6 or even deeper retracement. But longer term, if I were to zoom out, I'm looking up. Okay, folks, well, that's it for today's morning show. I hope you continue to enjoy the service and find it useful. Don't forget, any questions, points, comments, anything at all, you can reach us in Slack. If you are a member of the Inner Circle service and you're yet to get signed up for the Slack channels, reach out, drop me an email, post a comment on this article, whatever you like, but get hold of us and get yourself signed up for Slack. That's where the real-time chat is. That's where the trade disclosure alerts are. We have a short-term charting channel that's used by an increasing number of our really skilled members, and we have a channel on the index ETFs becoming better used too. So make sure that you are in that Slack real-time chat environment. Okay, folks, thanks for being members of the service, and we'll see you all soon.